welcome our viewers here in Nigeria and around the world. This is Business Morning. I am Busi Mafayi. Let's get the show started. The latest looted fund of $318 million linked to Nigeria's former head of state, late General Sani Abacha, will be handed over to Nigeria's Sovereign Wealth Fund manager, the Nigeria Sovereign Investment Authority. The fund will be used to produce or to do three major road infrastructure within the country. Sources says this morning that the move was part of the deal reached between Nigeria and some U.S. agencies involved in the repatriation of the looted monies traced to the island of Jersey. The latest move by the government was a departure from previous Sani Abacha's looted funds that were largely drawn down and shared or distributed. On to Market Street, the listed Suno Assurance PLC is holding a special shareholders meeting next month to seek approvals to do a share reconstruction. The company says it's planning to cancel 4 out of 5 existing shares held by shareholders of the company. That will bring the total number of shares at 11.2 billion down to 2.8 billion shares. That will be post-reconstruction. The insurer says it's looking to repurchase fractional shares which may arise from the share reconstruction exercise. It's also looking to ask shareholders to approve plans to raise funds to refinance the company's debt to Daewoo Securities Europe Limited and the probability of converting some of the debt into equity at prevailing market prices. All that will be on the table on March the 9th as Suno Assurance gets ready for the December 2020 deadline, which has been set for the recapitalization of the insurance sector. A number of these listed insurers are reporting their earnings for 2019 already, giving investors an idea of where they are headed under the new arrangement. So the Nigerian Stock Exchange is aggressively pursuing the move to expand the country's derivatives market. So is in bed with the Securities and Exchange Commission, explaining to market participants how the regulation work around derivatives market. We have spent some time on this a few weeks ago, but again, we want everyone to understand how regulation works when it comes to derivatives market. It's a whole lot of paper. You are buying the papers on the underlying assets. That's what derivatives mean, basically. But what about the regulations that will prevent misbehavior when you're doing derivatives trading? That's what the NSE SEC joint summit yesterday was all about. Let's take a listen first to the man who is in charge of derivatives at the SEC, and that's Timi Agama, who's the acting head of registration, exchanges and innovation at the Securities and Exchange Commission.
We test scenarios while creating these rules. And once that is done and we are satisfied with what we know we have, we share it with the public. We share it with the public to elicit comments from people who are either for us or against us. And once these comments come through, we review them again and ask ourselves, are they justifiable? Are the comments with good intent? Or do they intend to throw us under the bus? So don't be surprised. You may have sent us some comments and we said no. We won't accept it. You will have sent some and we agree, because probably we didn't think through it to that point. And so after doing that, we will now issue the rules. Of course, they will go through the board of the SEC and you have a ministerial confirmation. So I've talked about participants. The participants must be strong. They must know exactly what they intend to do. They must have a vision of how they want to drive the market. There must be people that want to go the long haul, because you have fair weather participants. They've heard that, okay, there is derivatives in Nigerian capital market. Everybody wants to be part of it. They want to be seen as a derivative trader, a clearing member, so that they can add one more accolade to their name, not knowing exactly what they ought to do, and they get their hands burnt. At the end of the day, they become a problem to to not only the institution, but even to the system. So all of that has to be taken care of. Who are these kind of persons? Hence, we need to be sure that the participants are people we can vouch for, we can hold out. Of course, with regards to the fit and proper persons test at the SEC. So beyond that is the issue of surveillance. Surveillance is very, very crucial and important in terms of seeing what is it that people are doing. What kind of trade is happening? Is anybody shortcutting anybody? Is there an intention to defraud? Or is there a mistake which is natural? Are there things we need to stop along the way as it is happening? Because you can actually halt a trade when you know that there's going to be trouble for the counterparty. But that cannot be done without a proper surveillance system. That is why the residence of derivative trading is at the exchange. And we expect that at the exchange that will trade derivatives will have very strong surveillance system. We are happy to note that the NSE has a strong surveillance system. And we believe they will activate that. Because the NSE operates on the NASDAQ OMX, which I'm aware. I know how strong it is. They will activate those parts that will require the NSE to get hold of anybody who intends to defraud the system. And of course, the SEC will
Timi Agama, who is the acting head of regulation, exchanges and market infrastructure at the SEC, providing some background from the regulatory point of view, how the rules are made for derivatives trading. Of course, the key outlook from the SEC is to ensure that no one is shortcutting or shortchanging the system. All this as we get the Nigerian Stock Exchange is focusing more on derivatives instruments in the new year 2020 and beyond to deepen the Nigerian stock market or securities market, generally speaking. So what about the Nigerian Stock Exchange, where some of these derivatives are traded? It's been a couple of years, and the stock exchange that has the trading platform has this to say. Let's listen to Lukman Adekola, who is the derivatives product manager at the Nigerian Stock Exchange. We apologize for the lack of audio on that video material. Let's give you a sense of where we finished off the second trading day of the week. Of the market actually slowed down in terms of the loss that we saw on Monday, more than 1%. Yesterday was much lower, so the market trying to moderate its negative sentiment, 0.35%, where the finishing line was on Tuesday, but now still below the 28,000 level. We were done with the big rally that we saw in the beginning, at the beginning of the year in January. So we dipped below the 15 trillion naira level. The market daily turnover was, however, a bit consistent. If you check through the next page, where we finished off 254.86 million for 3.04 billion naira in about 5,200 transactions. That shows that market still very strong in terms of sentiment for the Nigerian stocks. The banking sector, if you look at the 5 most active sectors that we track, the banking sector was still down to 1.09%. The consumer goods was off track, 0.82%. Industrial goods was down by less than 0.1%. Insurance down 0.65%, and oil and gas about 0.18%. Investors still booking some profit, even as the earnings season gets seriously underway on our market straight. Yesterday we had about a dozen earnings and market notices being filed by listed companies. So still talking about derivatives in the Nigerian market, I think we got the audio patch well outlined for you. Lukman Adekola, who is the derivatives product manager at the Nigerian Stock Exchange, explaining the operator's side of regulations and rules around derivatives instruments trading. Take a listen.
A feasibility study was carried out in between 2013 2014 by the exchange, and the project kicked off in 2015. And not to say this was done in isolation, the SEC also, they were doing their part in terms of the whole feasibility, their own feasibility study and the kickoff of the project on their side. And the next phase was to basically start looking at enhancing the existing legal, operational, and technological framework of the exchange. So on this slide is basically what we are trying to tell you is basically our journey so far, how far the exchange has gone, what we have done, what we have been able to achieve, what we will continue to do till we get to a certain level of comfortability, until the key players in the market are satisfied or can easily say we now understand and we're able to basically bring everybody on board to that level where we can bring everyone on board to that satisfactory level of the participating in this derivatives market. So what we have here is basically we have the ones highlighted in green showing what has been achieved, and if you look at the legal framework box, you'll see that we've practically achieved everything. And the last part of that was the SEC releasing their own rules on not just derivatives trading but on clearing side of things. Then we move on to the technological aspect, and although we have one last item that is in black, that is a future task, and that is so because of the clearing infrastructure preparation. So we've been hearing about clearing. So basically there is still a need for that handshake between the trading system and the clearing system. So that is where we are on that side of technology. For product development and awareness, we've done, yes, feasibility study has been done, but the critical aspects, the two major aspects for us that we don't intend to shut down, that even once we launch, we'll continue to do is training for market for interested participants, and also market consultation. And that is key because like the speakers have all mentioned earlier, there's a need for development in terms of capacity building, where we'll continue to encourage people, see how we can help develop the market, do this be the main play the role of an advocacy person for training and helping people develop to get to this satisfactory level, where even because from my engagement so far in the market, I know some people have the expertise to trade derivatives in the firm, but at the end of the day, you still have to help the board get some form of comfort for them to approve you even doing that trade or carrying out a derivative transaction within the firm. So that is also required. So where we are not just going to help the key player, or should I say the trader or the member, the representative of a firm, understand that, get to that satisfactory level, but we are also playing that advocacy role of even helping the organization as a whole understand the role of derivatives and how beneficial it will be for not just the firm but for the economy as a whole. And the last part is the membership. So like one of my senior colleagues mentioned earlier, it's we'll continue to call for expression. So far we've gotten some members have submitted application. We are still talking to some other people. We understand that most interested participants will not want to be the first in the market, but they will want to see what happens. But what I would say to that is to basically say it's a process where you have to start. I will encourage you to start now, even if you're looking to see how things play out in the market. But because it's a process and it's not like it's not. Derivatives it's very important and it's key, and the risk involved also, if not managed well, you can burn your fingers. So because of that whole process, it's a step where you can start by taking the first step, or even showing your intention, or receiving the application form and start putting the application package together, which is what we've been encouraging people to start doing. And the process of membership is we don't intend to just give you an application form and for you to go away with and start battling with it. It's going to be a process like hand-holding process where we'll work with you. We would continue to communicate with you, visit you regularly to make sure you are able to tidy the loose ends, and wherever you have questions, we are at your door, not just waiting for your call, we're at your door to answer those questions. That's the approach we are taking for this. And the other two aspects, again, that is the future task, is basically the training and compliance examination, which he already mentioned earlier. So the next place I'll go to is one other key important aspect is the derivatives market structure. Like we've all heard earlier on, the importance of, we cannot downplay the importance of a CCP for an exchange traded derivatives, and even for OTC that want to be standardized and be reported. So basically, what this shows us is basically the market structure, what we are going to be looking at in terms of derivatives trade happening. And if you can see the CCP at the top of it. And if you look further down below the CCP, you would see the clearing member, and you see the relationship between the clearing member and the exchange, and the exchange and the CCP. So before a trade becomes a trade, tradable on the exchange, the CCP would have to agree to clear that transaction. That is key. That's the importance of a CCP for a derivatives transaction. And you can also see the trading member. So sometimes a clearing member can decide to be a trading member, which was mentioned earlier on, but you just have to meet the required regulation for you to do that. A trading member would have to be registered with a clearing member. A trading member will have to be registered with a clearing member to complete the full application process of becoming a dealing member of the exchange. So also the clearing members, the clearing house would also have its own rules for clearing members, and the clearing member would also have their own rules for trading members. So it's a whole process, and and if you look at it also, so we have all sort of exchanges of data, and it is at this process that you see where we have the collateral management comes in, where we have the margin management, where we have things like margin call, where there's a threshold. And the purpose of this is basically to protect the buyer or the seller. Since the CCP is going to be the buyer to the seller and the seller to the buyer, the CCP also, they have to protect their own balance sheet. So here, hence why you're required to put down a form of collateral. And there will be margin calls whenever the value of your collateral falls below the threshold that is being set by the CCP. So the CCP has its own rules different from that of the trading. So the exchange rules, they are different from the CCP rules. So basically, this is what this derivatives market structure is talking about here for us. And the next place I'll go to is basically, not to waste more time, is the listing of derivatives. So basically, the listing of derivatives, the exchange would not be the ones listing derivatives. We would receive requests from members, from participants to list derivatives. And when members and this request will come in either of the recognized information process in our rules. And we are expected to provide some of the information, such as the underlying asset, the strike price, the tick size, or if it's an option, the option type is a call or put option. If the expiration month. So we have, in our rules, we have some requirements that you are expected to provide to us for us to list the transaction or to accept it for trading on our system. So basically what this slide shows us is basically telling us about some of the requirements and information you provide to the exchange for us to accept to list the transaction. We're going to play the role of managing position limit for now, and we are going to be very helpful with that, and we are going to do that in conjunction with also the CCP to make sure people are not doing above what they can carry. So even for you to carry out trades or ongoing trades, there will be clearance from the CCP for you to accept a trade to happen. So we would work with the clearinghouse here and the clearing member and find out to prevent default. So one of the major purposes of a clearinghouse is to basically envisage if there's going to be a default and see how we can prevent default, not to eliminate default, but prevent default on this. In a theoretical aspect and all that, so in some instances we are able to prevent default, but in some other instances you might not be able to prevent default, but reduce the effect of default.
quite a bit of knowledge and understanding and more information about how the derivatives market work, in particular for traders who are getting their hands wet in the business of derivatives products trading within the Nigerian marketplace. When we come back, the outlook for the new year 2020 continues. There are headwinds and tailwinds to consider globally and locally, and that's what top market experts are still talking about in part 2.